US Treasuries right now. Did it change for you at all this week with the pushback from some Europeans who say the US is not worth investing in right now? It's not creditworthy. The president's changing dialogue about Greenland. Is it noise or is it meaningful?
I think it's both. So just because there hasn't been a sustained reaction today doesn't mean there's not medium to longer term implications. I do believe that over time you'll see less enthusiasm to invest in U.S. Treasuries. Will that happen right now? No. You see it in the tick data, you see it in other data. The flows are still pretty sizable into Treasuries. But what we're seeing and what we're hearing, particularly outside the U.S., is just less enthusiasm and this quote unquote passive allocation away from Treasuries. So you're just less likely.
Why less enthusiasm? What are the reasons given?
Well, it manifests itself through this notion of risk/term premium, right? On the back end. And if you kind of look at the U.S. versus other jurisdictions, it's still pretty flat. Japan's a classic example where there's been a massive repricing. All else equal, that takes money out of Treasuries into JGBs as well. And so what we're seeing and hearing from Japanese investors is that finally, after a very, very long time, it's more advantageous for them to remain in their local market instead of going outside. So that's one factor. But these things just take time. And everyone wants this immediacy, this snap reaction. And I don't think the market works that way. It's too large of a market and it's too well entrenched, but it's over time we'll get a better sense.
So what does that mean then for the U.S. yield curve over time?
Well, I think the curve is poised to steepen. If you look at the U.S. Curve as an example, it's still not even at like the average steep levels. And it seems to me the risk out there is above average. You look at other places globally, curves are steeper. You look at the fiscal trajectory, that points to a steeper curve. You look at inflation dynamics, being just more robust than what we saw the previous 10 years. So I think all these things point to a steeper curve. That's kind of my view and the bias there.
What gets us there, and how quickly do we get there in terms?
Well, if I knew exactly that. But these things do take time, right? So it's not going to be immediate impact. So my thought, my view, our view is that over the course of this year, you'll just see a continued steepening. So even though the markets responded a lot this week, there's a lot of informational content in the price action. So you mentioned the markets have rallied in the face of kind of the latest news, but it still hasn't completely retraced, right? So what you're seeing is these more negative moves, more pronounced than the positive, and it's not being offset one for one. I think there's value in seeing that, and I think that tells you a lot about the trend.
Is this, if it was a different administration, different policies, would we see this trade? Would we see this conversation? And I guess I'm going back to Greg thinking about how much of this has to do with the fiscal situation of the United States government. It's not, other countries have similar problems or some problems, but I keep thinking about the U.S. situation.
Yeah.
So is it something, again, specific to policies that we are seeing in this White House? Or is it, it's something that's been building in the U.S. government fiscal house? It's
both, right? I mean, you look at the U.S. fiscal situation. It is just continuing to worsen, right? And so there was a step function higher during the pandemic. That's a global phenomena, as you mentioned. So fiscal is a problem everywhere, which somewhat perversely helps out the U.S. in a way.
Yeah.
But I do think, the latest fiscal stimulus coming through comes at a cost. And then I do think just how policy is being conducted has an impact on foreign investors. And you put it all together, and I think that's what matters. So it's not a single event. It's a bunch of things put together.
Well, we're sort of hearing this rhetoric come out of folks at Davos. We've got a great story that does a roundup of this on the Bloomberg terminal. One of those people, Gita Gopinath, formerly of the IMF, said it's clear that investors no longer consider the U.S. the secure borrower that it once was. Is she right?
I think that's a little melodramatic, and I don't think that's right. But at the end of the day, the more debt to GDP you have, the worse your fiscal finances are, the closer you are to that tipping point. Mm-hmm. One of the scary aspects about this type of environment is that there is no magical number. Markets move, investors lose faith, and you can't pinpoint exactly the precise time around it. But if we learned anything, what happened in France, UK, even now in Japan, is the tie of having kind of heightened debt to GDP with, just call it, administrative political instability has a tendency of wreaking havoc on the bond market.
I do just think about, especially in the U.S. situation, we talk about the birth rate going down, an aging population, tapping into more, safety nets, if you will. We've seen this picture before, right? You think about Japan and some other nations. It just feels like a lot of nations are moving towards this, our pushback against immigration. And I'm curious, at a time where certainly more Americans are relying on the financial markets for retirement and things, like, it just feels a little messy and a little ugly here of how this all kind of ultimately plays out.
Yeah, I mean, it's always, feeling darkest or worse when you're going through it. But, there's a lot of positives going on as well. There's lots of focus on, AI as an example, and what does that mean for productivity? And if you just think about productivity through the lens of debt sustainability, if you get 50 basis points of uplift in productivity, that actually changes the whole fiscal trajectory. You go from kind of a baseline of 170% of GDP down to about 117%.
Right.
So there are some real positives here as well. But, on the immigration side, you're quite right. We've seen this story elsewhere. We saw it in Japan. We're definitely going to see it in China. We see it across Europe. And what has been a saving grace for the U.S. from an economic standpoint, this is not a political statement, but from an economic standpoint, has been actually immigration.
Oh yeah, you just have to look at the numbers. I mean, it's not a political statement at all. We talk about this all the time. So absent that, what happens?
Well, then we're very similar to these European countries.